that you are investing in growth stocks when you're a fundamental investor. Whereas when you are looking at the technicals, you have a lot more data available to you. So when you're looking and doing your fundamental analysis, you may be able to find out whether a company is over or undervalued or things of that nature. You may be even able to do a price, rating for them with just looking at the fundamentals. Whereas when we're talking about the technicals, what we're looking at is the chart itself. So it's important to be able to understand both. Most fundamental traders are swing traders, and swing trading is awesome. But a great way to hedge against your swing trades is scalping. And scalping is not something that you do when you're trading based on fundamental analysis. It's from technical analysis because you're taking from certain levels, very small intraday levels. The goal of scalping is to get a small change, very small change in the underlying price. The beautiful thing about it is with scalping, you're taking profits early and often, and that consistency leads to compounding gains. And what in most cases, again, I'll circle back, scalping is a great way to hedge swing positions. Okay. And the point that I'm getting to is that there are benefits of technical analysis and there are drawbacks of technical analysis. And I hope that I've kind of laid that out for you guys to be able to understand a little bit more as to why I trade technically. And now I'm going to get to the how I trade technically. So you're seeing some stuff on my screen here on SPY. All right, you're seeing some stuff going on here at the bottom. You're seeing some lines on my chart. You're seeing candles. It's maybe you're familiar with most of this stuff. You're familiar with, at the bottom of my screen, weighted price action with MACD, with an ADX, with MACD histogram, but also you're seeing flags that pop up based upon the correlation MACD either crossing bullish or bearish. That's just the bottom half. Okay, and then the top half, what we're seeing is horizontal price action resistance at 460.05. Then just above there, we have a little fib action. This yellow line running through the middle of the screen is a 200 EMA. Okay, so I'm going to take some of this other stuff off the screen. Hell, we're not even going to look at SPY right now. We're going to go look at, I don't know, let's go check on Walmart. Well, this is actually charted and behaving perfectly. I didn't even plan this, I promise, but look at Walmart right now. Came down to our horizontal support and resistance. I haven't looked at a Walmart chart in probably 2 weeks, and it's come directly up to our fib, our highest fib level, which we have a resistance point. Anyways, I'm going to go find another chart that doesn't have something on it. Maybe Shopify or think of them. Yeah, we'll go look at Shopify. Yeah. Nope, I've got a fib on Shopify. Yeah, we'll look at like bonds. Yeah, we'll look at like the 10-year bond. Oh, I hate that. I'll pull up a different set of E-mini futures or something like that. I'll pull up regular futures. Sorry, guys. All right, I'll pull up regular futures, E-mini futures. If you guys remember me looking at futures in our last class, so all you're seeing on the screen here, we don't have volume up. We just have our 200 EMA. So this is where we're going to start, and we're going to build off from there. So there's EMAs, there's SMAs, EMA, exponential moving average, as opposed to a simple moving average. The SMA is known to be the smoother or the smooth moving average. That's what some people like to jokingly refer to it as. I like using the EMA just for me. It's personal preference. I don't care for the aesthetic. If I care for the aesthetic, I'll turn my trend cloud on or something like that. But I like having an EMA. That's just personal preference. Now, identifying certain things within technical analysis can be difficult, okay? Because when you're first getting into it, you don't really know where to start. Something that technical analysis will be able to help with immediately is identifying whether you're in an uptrend or a downtrend. Okay, visually, you can look at the chart and see if it's going up or down, right? But you can also stack on using a moving average. Whether it's an SMA or an EMA, the details really don't matter, okay? If we're above our 200 EMA, then typically we are trending upwards. If we are below, we are trending downwards. So having something like a 200 moving average on your screen is going to help you visualize a fluctuating point of resistance or support, but also tell you whether we're trending up or down. So those are the benefits of using not only moving averages, but the 200 EMA. Okay, the 200 EMA is one of the more common EMAs. I don't want to, throw you guys, a bunch of knowledge about technical analysis. So the next thing we know, you've got like 8 lines on your chart. That's really unnecessary. But what I will do is I'll say the popular lines to have on your chart and why you might want to have those on. So the 200 EMA or the 200 EMA, the 50 EMA, the 20, and then the 9. Okay, another very common line to have on your chart, fluctuating line, is the VWAP. Okay, those are really important, and it's important to utilize those lines. Like, don't go make some like 17-day moving average. Like, just pick the 14 or the 20, which is like what you would regularly see. Like, don't go pick 35 because it's like between 20 and 50 EMAs. That doesn't correlate well. Reason being is you got to think about the psychology just for a moment. If these are objectively the more popular moving averages, you using an offset moving average would hurt you if you're trying to utilize it as a point of anticipated support or resistance. Okay, because if you're anticipating, you're using, let's say for instance, we don't want to use the 20 EMA, we don't want to use the 50 EMA, we want the moving average, on 30 for whatever reason, right? We want it on 30 because, in our head, we've come to some conclusion that 30 is going to be helpful or the 35 is going to be helpful. Now, when you're seeing the price raise to this level, you may be anticipating resistance, or vice versa, you may be anticipating support. Okay, you're not utilizing the moving average, what they're really for, if you're not utilizing, the main moving averages. From a psychological standpoint, if everybody else is trading on a different chart, then you're not playing by the same rules. You're not. So make your chart. However, understand that 200 EMA, 50 EMA, and VWAP are on other people's charts. Market maker charts. Algorithms trade the VWAP. One of the most out of any HFT high frequency trading algorithm, the VWAP is one of the most traded to retracement levels for HFT. It's just they cycle back to VWAP. Everything leads back and points back to VWAP. Always look at any chart just about ever, and you'll see that. So if you're not trading with VWAP, or if you use the VWAP but you customize your VWAP to be weird, there may be an indifference, and it's just important for me to say that kind of as a disclaimer, so you guys can try to wrap your head around that. All right, so we talked about moving averages just a little bit, and it's also, I should say, that this is a lagging moving average. Most moving averages are lagging. You can have leading versions of moving averages, but typically speaking, they are lagging. So they are, behind the price. So with that being said, I'll throw on our 50 and our 20 moving average, and just show you guys kind of what that looks like here on a 6-minute chart. Okay, so on a 6-minute chart, we're seeing how things are fluctuating with this kind of fuchsia line. This would be our 20, the orange is our 50, and the 200 is our yellow line. Okay, so we have overall the 200 EMA is something that I personally don't trade against. I don't like to trade against, and if I do, I'm mitigating my expectations. Okay, what I look for momentous, for momentum flipping or for momentous pushes are crosses. This is one of the main things that people are using when they're looking at moving averages. They're using the cross of a moving average over another moving average as a signal to either enter or exit a trade or enter a short or enter a long. They're using those crosses. So this may have been a great area to enter. However, we're utilizing not just one simple thing in order for us to enter or exit a trade. Something that's just not something that we're going to do. You're going to always hear me say just about every lesson that I do that price action and volume are the two things that don't lie in technical trading. They do not lie. And Shakira's hips. Those are the only things that don't lie really in this world. All right. So it's important to realize also that we're not going to take a single trade because volume or because price action, because one moving average or one VWAP, nothing. No one piece of technical analysis. We're going to stack those, okay? So what are we looking for with moving averages? We may be using a cross like our 20 over our 50, meaning we're getting bullish again, okay? We may be looking for that, but we're also looking for what? We're looking to get over a resistance point, right? And then establish support. That's confirming our levels. We're also adding in volume here. We're seeing volume picking up, getting over our average volume. Seeing those buyers, what does that mean? That means the buyers are stepping in with conviction. Like, that's what we want to see. Okay, real quick, if you guys are on Discord and you can't view the stream, I just dropped a link down below, and you should be able to view the stream. No problem, and hear me. And I'll be monitoring that chat as well. Let me just... Alrighty. So you can also view the stream there if you're on the go. So we're utilizing several different things. So what I just did here is I utilized aesthetically what I saw is us getting us crossing, our moving averages crossing, okay? What did that also lead me to see? Okay, what I also saw was us getting over a previous point of resistance. We also were getting over a previous point of resistance. We had an increase in volume, right? We had an increase in volume. This candle right here, we got over our resistance points. Okay, we retraced, and then we saw another volume pick back up. Okay, we're getting over our moving average here on our volume. Okay, this is just a very basic moving average for our volume. That's a good thing that I should throw out there. A lot of people use moving average on their volume chart, so that when they're seeing volume that's over the average, they're able to use that also as a signal. So we confirmed price action by seeing us getting over resistance. We confirmed with volume. Okay, we got a confirmation of our moving averages crossing bullish again. What are other things that we could have stacked? Well, for some people, that's enough to enter a trade right there. Okay, but maybe for us, we're wanting a little bit more. Okay, maybe we also had a VWAP on here, and we want to be back over VWAP before we enter our trade. Okay, so that would put us around 348 when we are getting, or I'm sorry, not 348, 330 when we're pushing back over our VWAP. Okay, pushing over our VWAP would have given us our first indication, or not our first indication before our moving average cross here. Our moving average cross is back here around 345. We got over VWAP at 330. We got over resistance at 306. And we had increase of volume in 306 as well. Okay, so we're building an individual, or not an individual, we're building this kind of sheet for us going long, okay? And this is all, again, under the 200 EMA. So what are we taking it to? Well, where's our price target? Well, our price target can be, at previous levels of resistance, okay? We see this area up here as resistance. So we'll throw a line down at this level, and we'll look right, okay? So we're seeing that this area is where that puts us, all right? So what we'll do is we'll be conservative, utilizing, what the 200 EMA does, and what it represents. Looking left, we have price action resistance here at the top, but look at this point down here as well. We also have some support from this move as well. So if we entered a trade down here because we saw a collection of things, we saw our volume picking up, we saw the price getting over resistance, this resistance point getting over another, picking back up off of support, over average volume, moving average cross, over VWAP. Where are we taking it to? Okay, we could take it to support or resistance up here. We could take it to our 200 EMA. But the point is we have several points that we could be utilizing for exit. Okay, the 200 EMA does scale, right? I like to take a lot of VWAP to 200 EMA pushes personally. I find day trading that on a 3 or a 6 minute is pretty successful. I don't like to use moving average crosses unless it's a 50 and 200 moving average cross. I like using that on a daily or a 4 hour because CNBC and market makers will actually talk when a 200 EMA is crossing over or under a 50 EMA. Because that's known as a death cross when it's going under. And CNBC does talk about that. So again, this goes back to if everybody else is looking at it, everybody else watches CNBC. See, what does CNBC talk about when they talk about technicals? They look at the 200 moving average and the 50 moving average on a long-term 4-hour or daily basis typically. So it's important, again, to look at points like that cross on a bigger time frame like that is definitely something to note. So that's when I'm looking at crosses. Are these recorded? Thy golden cross or thy death cross? says Hawk. Are these recorded where we can go back and watch them in the future? Yes, they are, Buns. If you look at the link just above that YouTube link, you'll see where the recording can be found for this. So I kind of mumbled through towards the beginning of the class about kind of the principles of technical analysis and a lot of the reasons and things of that nature. Now we're kind of at this point we're getting into the nitty gritty. But yeah, they're recorded. They're recorded and they're automatically streamed to YouTube. And if you're viewing on YouTube, you can also see the Discord chat too. So and you can see all the chat in playback. So gotta ignore that black box on my screen though. All right, so does anybody have any questions for me? Okay, what I just showed you guys was a scenario where, all of this kind of plays out, kind of the order in the way that it plays out as well. We're getting price action, with a volume spike. So we actually see volume picking up here first off of the support, because this area down here, why am I making a new one? I don't want to make a new one. I'm going to use this one. So we saw a double bottom here. We see a volume picking up, getting over resistance. Okay, we could have taken a scalp from a double bottom to a double top, but we really don't have much here. It's not looking bullish at all. We start getting stages of bullishness when we see an increase in volume, picking up off support, yes, getting over our 20 EMA, over our 50 EMA. Okay, getting over this actual resistance at this level, pushing over VWAP, finally getting a confirmation with our EMAs here crossing bullish. We haven't even talked about indicators, guys. So there's still plenty left to discuss for today's topic. Okay, we also talked about points of exiting. All right, looking left. We always look left for our exit points. We have an exit point down here, actually, that I didn't chart out. We could have utilized these points from the left to take resistance, or our 200 EMA. 200 EMA. All right, so if anybody has any questions, let me know. And we're going to start. I'm going to clear off some of this stuff on your screen here, and we're going to talk about indicators. So I'm going to pull off all that. We'll just leave the 200 moving average up there. Clear off all that as well. Keep it pretty simple here, though. I'll put a resistance here and a support down here. Just got a few points there. Just a few points, not overcomplicating, but something for us to kind of stack and refer to. So would you guys like for me to go over RSI, MACD, or stochastic first? Interested to see your thoughts on RSI. Okay, literally as I'm asking the question, you typed it. Perfect. RSI. Why did I just type in RSI and just hit enter? I just did that, didn't I? Oh gosh. Why is it condensed like this? I don't like that. TradingView changed the logo. It used to be FX. It used to just be an FX right here. That's weird. Yes, I do use RSI though, Mike. I do use RSI. So what I'll do is I'll take off this ADX down here, and we'll just keep up the RSI. So relative strength index or indicator, depending on how you like to skin that cat. But I like using RSI for overbought and oversold areas. Yes, that's great. That's all fine and dandy. I just like confirming and checking in with RSI to make sure we're not having a divergence. Okay, so I find benefits in the RSI as far as, a daily or a 4-hour chart, but I don't like RSI for just using it for an indication of entering a trade. And I'll tell you what I mean. So RSI can be used, it can generate a few different signals here. And those signals look like this. So the overbought, oversold, or a divergence. Okay, let me clean up this RSI to make it a little easier to see really quickly. So we'll do the RSI as a white line. Thicker white line, and we'll turn off this RSI moving average, and we'll turn off the middle band. I want it to be a little more purple. Yeah, that's good. Oh. There, 100%. Alrighty. So these are the things that RSI can give you for a signal. So our overbought area, overbought is everything above this gray dotted line. And maybe I just make these white dotted lines. Make it a little easier for you guys to see. And then down here we have oversold. Okay, and do I have an example of a divergence here? Maybe a bullish divergence. Yeah. Okay, so up here we see price decrease. Now RSI isn't dependent on price, but we do see price continuing or picking up when the RSI is going down. So it's picking up within here. No, that's a shitty example, actually. I'm sorry, guys. I'll find a better example for a divergence. I don't want to try to make something within here. But these are the two main areas, overbought and oversold areas for the RSI. And I'll bring up my little circle area. So overbought, everything that's above 70 line is overbought. Oversold, everything below our 30 line is oversold. Okay, people use overbought or oversold as signals for either entering a long position when we're oversold, or entering a short position when we're overbought, or selling your long position when we're overbought, or closing out of your short position when we're oversold. Okay, because typically what you see is a natural flow of the security wanting to recycle the RSI. And I'm going to show you some inconsistencies with that. So what we see right here, and right here, this window here. Okay, this is why I don't like using RSI for these two reasons. Boom. Cross it, oversold and overbought out. Okay, because what you're seeing here is the oversold area. You're wanting to go long up here, but guess what happened? We flop again. So it's no indication that we're going to necessarily return back to overbought. You have to utilize other things. Just looking at like a simple like volume analysis here, we see volume falling out, and then our price pulls back. So that was obvious if you're watching volume, but if you're watching just the RSI or trying to use the RSI as a signal to enter, just for the simple reason that we're oversold, you would have lost. It would have turned out poorly. That being said, that goes hand in hand with anything. If you're just using one single piece of technical analysis, this is a perfect example of the RSI saying, hey, go long, we're oversold, and it not working out because there's other things going on, right? We're way under the 200 EMA. We're not retesting any resistances. We're losing volume, right? We need to see those confirmations like we were seeing over here in that area when we were pulling up our moving averages. Now, what we're making sure of here, and what the RSI I like to use the RSI for, is making sure we don't have a divergence, meaning that the RSI is going up while the price is going down. So that, or vice versa. We don't want to have a divergence that's opposite of the way that we're trading. Because RSI divergences are a real thing, and they are very powerful. Notice how when we're entering a trade, we need several things to get into the position, right? We're looking for volume, price action. We're looking for whether it's moving averages, RSI also lining up. So maybe we're looking at the RSI being oversold and we're looking to go long, but we're needing to stack, everything else that I just said. But when it comes time to getting out of a trade, you should be like it should be easy for you to get out of a trade. You should need very little. You should need a lot to get in and very little to get out. Okay, the idea behind that is it keeps you safe. You should be ready at any point to pull the ripcord, and if it's a small loss, be able to mitigate that. Okay, pulling those emotions out. So if we're getting over, one of the things that we were getting in the trade for was because we were getting back over 20 EMA. We were getting over resistance. Let's say we start to fail that 20 EMA. We're getting out of the trade. Let's say we fail that resistance or fail that support. We're getting out. Let's say we start to see an RSI divergence. We're getting out, okay? If we're seeing any reason that we got into a trade start to fail, then we're just getting out, especially if we're in the green. Live to fight another day. Or you utilize it as a possible, if it's actually failing, I would recommend getting out. If you're seeing a retest, then we utilize those as areas of opportunity to possibly scale, depending on your trading style. May allow for scaling. But yeah, that's up to you guys. If anybody has any questions about what we've talked about so far, we've talked about moving averages. We talked about RSI. We talked about common mistakes when people are using either. misinterpreting, signals for instance, and kind of circling back to the importance of stacking confirmation levels. Any questions on that, guys? Just bring them up in the live education chat. All right, I want to go, since we're about 12:40 right now, I want to go do some real-time technical analysis for you guys. We've been looking at past patterns. What I'm going to need from you guys, though, is I'm going to need you to request what it is that I look for. So drop a ticker. I'll go look at your play right now. I want to do live technical analysis for you guys. So I've gone back and I've ran this scenario. If you guys are watching the recording, gone back, you can watch this. But now it's time. Now it's time that we. Oh, why is chat disabled on YouTube? Hold on. Oh, I marked it. It was safe for kids. I mean, I'm not. It's not safe for kids, but chat's disabled when that's ticked. That's so weird. Okay, YouTube, you have a chat as well. So if you guys are wanting to see some live technical analysis, thank you, Microsoft. Oh my God. Somebody's been saying it. I scalped Microsoft today, John, and I'm going to show you exactly how I did it. And it was so aggressive. And this is like the absolute max that you guys should be doing when it comes to like technical analysis. Like I stretched myself very thin today as far as like confirmations going. But to play this, I was very minimal on the confirmations. So what I saw here at the open for Microsoft real quick. So I scalped this in 2 minutes. Here, where's my trade? Hold on. Let me get the trade real quick. I didn't post it in here. Where did I put it? Where is that? Did I put it in watch list? Profit? Yeah, I did. Okay. All right, so this was my trade. I know you guys can see it. So I entered Microsoft. This is just one of my small accounts. This is actually my first day using it. And what I did is I entered Microsoft trade at 9:37 a.m. very shortly after open, and I was out 2 minutes later. 2 minutes later. So for a nice profit too. What did that profit break out to be percentage-wise? I'm trying to remember. 285, 343. Math is hard. I think that's 20.4%. Okay, I didn't need to do the points. It's like 20%. It's like 20% trade in 2 minutes. So this is a weekly contract, and I'll show you guys why I did that. I also did the same with Roblox. This 3-minute trade. I actually entered and exited in 2 minutes. It's just the way that it filled. But anyways, this is a Microsoft trade. So I did this on a 3-minute chart on, let's say, 9:36. So 9:37 we entered. 9:37 we entered. Boop, 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 boop. I'll just go to the 1 minute. Screw it. And then we are out up here. So what I was seeing is a pre-market high level. Pre-market high. Us breaking over pre-market high. That was, I started getting alerts that we were breaking over pre-market high because Microsoft was moving well in pre-market, but wasn't anything that like I was like drooling over, because it's not like we were going and breaking over previous day like session highs until we did, and I traded that. So I traded all the way up to this resistance. So we had previous day high levels, okay? And so we had this big window from pre-market high to, like I said, previous day high levels. We had a very big window that if we were moving at the open, I knew that we would go hit those. And we did. We actually blew over it. So I was able to get into a trade at 937 once we had a lot of confirmation getting over pre-market high, and then just get out as soon as I was hitting like 20%. I was like, man, I'm good. I just ripped the limit and pulled it out. I actually ripped was it a limit or a market? I think it was a market that I just got out and was like, okay, 2 minutes, not bad. 20% on the account is 20% trade in 2 minutes, not bad. But that was the idea there. This was, again, like, this was pretty risky, I would say, because it's not like it's not slow. It wasn't slow. 21-ish. 285, 343. Don't make me break out my calculator. But yeah, I think it's... Yo, is that the Atlanta Braves World Series shot right there, Doctor? That's what I like to see, man. Go Braves. I thought I saw the little KC Royals. Oh, can I kick you? Can I kick you out of here? No. Oh, no, you're fine. So, yeah, this was a higher risk trade just because, I'm not stacking up. This was literally how my chart looked. And this was just me trying to keep it very simple. Seeing us popping up over higher points with good volume. We had a great pre-market. I knew that we had a big gap. So it was an area of fluidity is what I like to call it. And I know it's a bit dicey saying that with a chemist lurking in the chat, but, an area of fluidity, right? But yeah, this was kind of what it takes to scalp, to be able to get in, to get out, to see those levels, to have the chart the day before. So I used pre-market high and previous session high to be able to trade those. Okay, using technical analysis, we're over the 200 EMA, looking great. Okay, we're feeling great. We've got confirmation levels for days. Okay, and my chart isn't overcomplicated. It's not like I also have like a 9 and a 20 and a 50. Like, this is how my chart looks, except like I also have an algo. I mean, that helps. But, I wasn't trading off of a signal. I was just using the algo. I guess if I was looking at a 2 minute, I did get a signal, huh? What do you know? All right, any questions, guys? We'll do some live technical analysis. None of that was live. That was a trading recap. I'm sorry. I just realized that. Okay, so back over the 200 EMA. Right now we're in a pivot kind of area. Let me turn this algorithm off. I want to keep things super, super basic. We'll keep volume on here. So let me get a ellipse here. We'll kind of highlight some area. All right, so we're seeing this area right here having some resistance. So what we can do is we can drop a support resistance line. We'll look left, and we'll see that we do have session highs all the way up here. Okay, all the way up there. So we're seeing resistance right here currently. All right, we're on a 1 minute chart, which I really don't like 1 minute charts. I don't like trading on them. I just find them so stressful. I find them so stressful. I like the 3 minute the best. So we're going to switch back here to the 3 minute. All right, and we're going to throw some other stuff on and kind of see what we see. So real quick, we have a session low of here. We have another support down here, which I'm just going to pull off just to kind of clean the chart up a little bit. So we have kind of session lows, where we have I don't know how I want to say it. This is like the intraday pullback level. I just don't want to like type all that and have it going halfway across my screen. But we'll have high of day up here. We'll have high of day up there. And then PVHOD, previous high of day. So that would make this point here, after making a high of day, like a higher low or something like that, HL. Do you use a 3-minute chart to enter and exit trades, or do you move it to the 1-minute chart? I use 3-minute chart to enter and exit trades. I do, yes. I don't really use the 1-minute chart hardly ever. I was just using the 1 minute in that scenario to show the minute breakdown of when I entered and when I exited. I did that entire trade. I think it was within 1 3-minute candle because I was so satisfied with what it was that we were doing on that 3-minute candle. Okay, and it's always a good idea when IV is in your favor to pull profit. And with a small account or something like that, just trading a contract, I rip it. I don't even think twice about it. I don't care if that runs another 100, 200, 1,000%. I'd rather miss out on making money than lose money. So I'll take my 20% in 2 minutes, man. And guess what? I did it again with Roblox like 5 minutes later. And then I was like, all right, done. And you know, it's funny because I would have done those trades live here with you guys this morning, but on that little account. But it's okay. It's okay. So entering a short position here because, or not necessarily at this current level with Microsoft, what we're anticipating is kind of a pullback to previous high of day. If we can't hold volume on this candle coming in. So we do have an overall decrease in volume. Previous 3-minute volume candle was good. We just locked in another volume candle. We've got a hammer up here based upon doji. That's a reversal sign. So anticipating previous high of day push. Okay, there's 9 minutes left in lunch. So lunchtime is between noon and 1 typically over on Wall Street. So you see a lot of volume dry out across the board. And we ended up bleeding up on Microsoft during that time from about 11:30 to 12:30. And we're going to consolidate under high or low, more than likely recycle previous high of low. And then ideally, we'd like to see a close over over these session lows or this intraday dip level. I'd like for us to close somewhere within this range the rest of the day. So this would be great just for Microsoft. Microsoft needs a big win. You know, they just put their necks out with the acquisition for Activision, especially considering it's $95 a share, those ding-dongs, Activision. I don't know what Microsoft was thinking buying Activision at $95 a share. I mean, it's a steal if you look at a year, like a 10-year. Because they've been around for since the 90s, but if you're looking at it from that perspective, it looks like a steal. But I think they could have done it for less. I think Microsoft could have done it, but they're so big, they don't really have to worry about it. So anticipating a little pullback here. Okay, we had our volume pullback. We couldn't get over our higher low point. Right, so that's kind of what we're anticipating to retest a support level. Okay, we've got a doji pattern locked in there as well. So we're looking at Microsoft here. What I can also do is I can go look at Apple on another chart. So I'll close out of Lucid's looking great. United Airlines looking great. Go take a peek at Apple. See that Apple's chart looks very different than Microsoft's chart because Apple didn't have a big spike this morning, but everybody got this dip. Everybody got this dip here. Boom. So after we peaked around 10, everything came down. So there was 10 o'clock, and then we just came down. Let me hit the head real quick, guys, and I'll be back. What we're anticipating for Apple here is a retest of 168.28. We are sub 200 EMA. I do have a short signal as my previous signal. I'm not really looking at that right now, but just looking at under the 200 EMA. And then this point right here, we couldn't retest this point again and push back over, mostly because 200 EMA is a significant amount of pressure pushing downwards. So look for a retest on Apple here. But there's about 6 minutes left of lunch, so we're going to get a couple more candles, and then hopefully volume will start picking back up again. Hit the head. I'll be back in 2 minutes, guys. So am I supposed to look at this? This afternoon, I'm holding a press conference to answer questions. I actually knew that because I was just watching. I forget the network. Just watching. 4 p.m. Thank you. That's all I needed. That's all I needed, Joe. I needed you to wait and let the market close, my guy. I just needed you to wait, sir. Let the market close. I don't want Powell talking during the day. I don't want you talking during the day. Because they move the market, you know? Jay Powell comes up, he says something about tapering, and everybody's losing their mind. Be back 1 sec, guys. Alrighty. Okay, so you guys are getting a little bit more into the mind of a technical trader, doing some live technical analysis. So what I want from you guys is for you guys to send me your tickers, just drop in the live education chat, or if you're watching on YouTube right now, because we're streaming over there, just drop a ticker in the chat. I'll go over, I'll do some technical analysis, and we'll keep an eye on that as things move. Look at this, retesting. So we had a little double bottom here in between our higher low and previous high of day. Okay, we've got a very, very minuscule volume pickup here. Is it enough? Is it enough to do it on this candle? We don't know. We've got 3 minutes left within this lunch window here. Depends. We'll see. So playing the cycle, we're still green on the trade once we are, from entering at the higher low. Pretty close, but we're looking to take a short down to previous high of day. You could be conservative and just taking it back to this intermediary level. Now we've got, support down here in the middle. So we have, let me just use this. So we had a point of support here and a point of resistance up here. This is just our previous high of day. So we could have had this point here selected, and we could have wicked down and hit a target here. You can use this maybe as T1 and T2. Just wanting to keep the chart simple here for you guys. And remember, if we're seeing a spike above this, we have our high of day wick like all the way up there, just under 314. So we're watching these levels here. We're seeing another rejection of our higher low. Notice how I'm using the higher low level to the candle body. It gives us a little bit of room for the wicks to breathe, right? Same here. We're using the candle body as our high point here, not this wick. So it gives us a little bit of room to breathe and an actual point between the two. Watching volume down here. We've got 30 seconds left. We'll see if this volume picks up. Lunch coming out to a close right now. It's cool if the volume picks up a little bit more than the last one, 20 seconds. It looks like we're going to do it. That's great. Now let's see this following candle after this candle closes in about 20 seconds. Confirm this level, this breakout here, and push over. Once we're pushing over our volume moving average, we're starting to get confirmation of retesting high of day here on Microsoft. So low conviction entry for a put to cycle higher low to previous high of day. Now that we have volume picking up here, we have that interest. It's 1 p.m. now, so lunch is coming back to a close. We don't have price action confirmation getting over. Price action confirmation would have been starting this candle and not touching our higher low. So our low conviction trade for the puts for rejecting our higher low, coming back to test our previous high of day, T1 and T2 right here. We're seeing these levels playing out. We're seeing a nice momentous push at this point. Volume may pick up over this with selling pressure. We're only 30 seconds in and we're already at these other 3-minute levels, just below these other 3-minute levels. So a lot of volatility here at the 1 p.m. window here on Microsoft at the end of lunch. Let's see how this is affecting the rest of the market. Okay, the market likes to move with Apple and Microsoft. So let's check on Apple, see how they're doing. Retesting 168.27. Remember, we're sub 200 EMA on Apple, so we're anticipating a recycle of this level. Not necessarily a session low, but we're anticipating this being our 0.1 and maybe our 0.2 for scalps. Okay, and this is kind of how you play, this increase of volume. So we wicked down, we came close to our T1, we didn't quite hit it. You could have taken profit on this since we are getting volume picking up once again. However, what I'm seeing here, boom, boom, boom. Guess what? We're going to draw a trend line and see overall decreasing volume. Okay, overall decreasing volume. So let's break this trend line, confirm over our volume moving average, and lock a candle above our higher low to see a cycle to high of day. That's what we need for the upside. That's what we need for the downside. Everything's out there on the table. Any questions, drop them in the live education chat. If you want me to monitor another ticker, I'll do that. I'll pull up SPY actually as well. We'll see how both of them interact with SPY. Okay, SPY over 200 EMA, retesting 200 EMA on this candle. We're seeing volume picking up over our volume moving average. Okay, we did have a downtrend in volume during lunch. Okay, we'll pull this down just a little bit to touch those volume candles. We're seeing volume picking up over. That's great. Remember, 1 p.m. down here. So we're seeing volume coming back after lunch. That's what we're anticipating. So our low conviction on our puts on Microsoft, and we're having a high conviction since we're over 200 EMA of a long position. We're wanting to go long. We may be able to scalp a put in between these levels here. Depending on your own risk reward, you could have already taken profit at some point just for 5, maybe 7%, which is enough for a scalper to eat and feed a family off of. So, all right, we're opening this candle below our higher low. All right, so we haven't confirmed a breakout above our higher low level. So this is looking bearish right now. We were able to get over our higher low as far as price pushed, but we're still seeing a downside to T1 and T2 looking very viable right now. Volume close above our previous point. So we have broken our trend line here for our decrease in volume. Okay, that will look like this. So we've increased volume, and it looks like our sellers are taking the cake right now. We'll see if we can push to our T1 or T2 points there on Microsoft. We're seeing SPY's probably going to retest 200 EMA one more time. Hopefully we don't break it. And if we do break it, what I'm looking for is this level here. Okay, we had a pickup there at resistance, trended down, built support down here. So this would be T1. We could have a T2 at this point from these areas here and here. So we have support down here. So this could be T1 or T2, and then this would be T3 down here. Whoa, that's crooked. T3 down there. If we're breaking our 200 EMA. If we're breaking over these levels, that would be great. What are we going to need? Volume to increase. Okay, minute 30, we might have over average volume, but we might be under our trend line here for volume. So let me snap this a little bit better so we can gauge that. Now I'm not going to touch this chart. We'll just kind of watch. Okay, so volume breaking over. Breaking over these 3-minute floaters. Probably push up right to our volume moving average line. I'm not really expecting us to in the last 40 seconds to break over the trend line here. Very well could, depending on momentum. But if we do, we'll probably be hitting T1. That being said, you could enter a long here on a 200 EMA bounce. 200 EMA bounce to a scalp up here. If we start to flush below, you can play the put side. Way more on the put side here. T1, 2, and 3. We only have one target here for a long. If we were to break over this, we would have T2 being at our high of day levels, 459.50. Okay, we hit our volume moving average line there. Do I trade weeklies most? Yes. Yes, when I'm scalping, I'm trading weeklies. Slippery slope is 0 DTEs. I have a whole spiel about 0 DTEs. Yeah, of course. So we're still under our higher low here on Microsoft. Still anticipating T1, T2. Okay, and this is a skill that is very difficult, but what I'm showing you guys is being able to play puts when we're actually green on the day. I mean, that is a skill that takes a lot of finessing. And me kind of breaking this down and showing you guys how Microsoft moves with Apple, how both affect SPY. It appears SPY after a dip almost always go back up to VWAP. Yep. Would it make sense to wait for bottom each day and then play towards VWAP? Just going back each day, it is crazy to see. Yes. So VWAP trades are my favorite. 200 EMA to VWAP are my favorite pushes to play. Also using pre-market levels there, Doctor. Great questions. With SPY, though, you got to be careful with 0 DTEs because, every other day contracts, because it's the highest traded options commodity, you got to be careful with those. So if you're not seeing the moves that you need within like an hour, And you really got to reevaluate your position. Maybe roll to another 1 or 2 or 3 day expiration. Zero DTEs take a lot of finessing. So mitigating expectations here if we're trading zero DTEs or weeklies, anticipating a cycle. We're entering puts here on a security that was up like 10 points at one point today. I mean, that's ridiculous. Microsoft up right now 2.62%. So this is a ridiculous skill, and I'm showing you guys here live how to do it and what that technical analysis looks like when I'm back, like how to back it, how to have conviction, and what a low conviction looks like, what a higher conviction looks like. Trading against a 200 EMA is difficult, but being able to put this entire situation in perspective here, I'm hoping that this is beneficial to you guys. I know Doctor's giving me feedback. If anybody else has any feedback for me or questions, just drop them in the live education chat. This is awesome. Yeah, of course. We're still under this higher low here, so our put entries we should be green on still. 5% is a great little area to consistently churn. We have our T1 and our T2 levels here as well that we're able to monitor. We can move over to a 1 minute chart because I know Robo was asking about that. And just show the overall decreasing volume and just kind of how that looks differently. And remember, I'm a big options trader. I don't like trading commons. I mean, there's nothing wrong with it, but I do a lot of scalping with options because I can make a lot more than trading commons. That's just my opinion. Would I have bought at the money? Yeah, I would have bought at the money. So this like, I think the contract's here at 311. So yeah, I would have bought like a 310 put. That's what I would have grabbed. I wouldn't have gone and grabbed like a 305 or a 300 or anything like that. It's pushing back over higher low right here. Watching volume. Volume's going to be our leading for this. $10 seconds left. We're going to lock in a volume bar below our previous one. So decreasing volume. We started this other candle right below higher low. Great question there, Robo. Yeah, what about a 310 put? What did I trade earlier? I traded the 310 call. So a little out of the money. That was a 2 minute trade. That was at the beginning of the day. Playing that volatility off the open. So like out of the money stuff is great when there's a lot of volatility, but when we're like right here kind of, between a couple different points, we're playing at the money stuff. About halfway through this volume bar here, and we're seeing us about halfway up our previous one. Do you have a set amount of contracts you buy? Do you scale? Yes, I like to scale. I like to scale big moves. When I'm scalping like this, I like to enter once and exit once. So if I'm playing like a pre-market level and we pop and make a new high of day, but we wick and we do it really quickly, that may be a good point to scale. What price target do you exit the theoretical 10 put, good or bad? As in, like, what am I pulling at a... If I'm closing, I'm, like, where I take a loss at, John? Because I'm just trading the chart. I'm not trading the premium. When do you close loss? Yeah, when we're closing a candle above our higher low, like not touching this higher low level at all. So it's important to, I'm going to reinforce this and say it like 3 times. Trade the chart, not the premium. Trade the chart, not the premium. Trade the chart, not the premium. That being said, when you're getting out, you can get out based upon premium. You can get out based upon premium when it's like comes to taking profit. Like hit those 5%, 10%, 15, 20%, those premium amounts, then, you know, get out if you're comfortable with it. But for exiting, you know, again, it could be, all right, if we're dipping down 5%, maybe that's a risk, you know, that's your risk strategy. Whereas I'm waiting to actually break that support or resistance, because this was my point for entry. I'm waiting for that point to be broken. But that's personal. So that's subjective. So it's all based upon you and how you like to trade. But at this higher low, if we're breaking this higher low, we're doing 2 things. We're entering a long position to take too high of day, and we're closing out of our put. But we haven't broken. We're still in the green. Let me check my DMs over here on my phone. I don't want to leak out any info here. If you guys send me a DM, just know I'm not going to open that up on stream. You know, a little pattern building up here. We do have a little bit of a trend going on here. You know, utilizing this higher low line and this trend line here. This is giving us a confirmation that what we're going to do is end up breaking down below to hit T1. Let's circle back and check on Apple. Still under our 200 EMA, not able to break over this pop on the day 169.63. So still looking bearish on Apple. SPY still trading within this little channel between our resistance here at 458.27 and our 200 EMA. Good questions, good feedback here, chat. Let's keep it up. What you've seen me do is put on some trend lines here to see our uptrend, to see our downtrend. Breaking our uptrend right now, confirming our downtrend. We also have a trend line at the bottom there for volume. We also see volume stair-stepping down once again. We'll confirm T1 once we pass 310.46. We'll push right to T1 if we break down about 15, 16 cents. We'll do it very quickly. Do you use stop limits to exit positions, triggers, brackets, OCO, etc., manual? I like to use limits to take profit. If I'm using a percentage base, like I'll do my entry, and then if I'm wanting to just look for 5% on the scalp, then I'll just calculate 5% of that, set my limit to enter. For a stop, I do it manually because I do this full time, and the loss or what I'm looking at to break is not usually dependent on a limit. So I mean, you can finesse TOS. So there we go. We're breaking that 310.46. So I'm thinking that we're going to go push down and tap T1 here really quickly. Still a great spot to take profit if you had taken that put entry above our T1, keeping it conservative there. About 20 cents off from smacking T1. I'll slide these over a little bit. So at this point, what we could be doing is we could be entering or moving our stop loss. If you are using, that feature that John, what you were saying, we could be entering our stop loss in the green here at this point. Maybe we're putting at 310.66. But we're still looking to take profit right when we hit 310.21. But again, we entered a trade. We never went red on it. At any point you could be closing out, taking profit. So right there, that would be hitting our stop loss, taking the green. Or if you're not and you're doing it manually, you're still in this trade. Remember, something that I said earlier, I'd rather miss out on making money than lose money. I'd rather, take profit here and us hit T1 and T2, great. Now we may be entering a long at previous high day to take it back to our higher low for another scalp. Maybe a long from T2 to T1 or T1 back to that higher low level. So I'm not going to be mad at any point if I decide to take profit and then this move were to, come to full fruition. Okay, about 50 seconds left on this volume candle. Looks like we're going to break over our stair-stepping downwards of volume here. Green candle here on the 3-minute. Good time to take profit. If you're on this put entry, you've probably gotten anywhere between 5 to 7, possibly upwards of about 10% on a weekly contract. Can't really ask for anything more on a scalp there. That's pretty great. Locked in a doji right over T1. Got to run. Thanks so much. Absolutely awesome to watch and learn. Yeah, of course, Doctor. Thanks for popping in, man. Next class that I'll be doing will be Wednesday, next Wednesday again. So I'm going to be doing every Wednesday. And we're about to hit our T1. Boom, there's T1 right there. Oh, I think we're about 2 pennies off of a T1. See you then. Yeah. Next class should be at 9 a.m. on Wednesday. But it's all going to be on Eastern. It should be, it will be recorded as well. Any questions about technical analysis, guys? We've stacked a lot of things on here. So if there's any gaps that I need to, go back, pay attention to, let me know. Came down there to T1, wicked down to it perfectly. I think we might have been like 1 penny off of hitting T1. We are the 1 minute just to see how close. Yeah, we're about 2-3 cents off of hitting T1, so that's pretty perfect. Love that. Appreciate the live analysis. Good stuff. Yeah, thanks. About 30 minutes left for today's slotted class, guys. If you have any questions, if you're ever watching on YouTube or if you're here in Discord, just drop them either in the live chat on YouTube or in the live education chat here on Discord. All right, I'm going to do something really quickly on my phone. I'm going to pull up the TOS chart for the 310 put and see what our premium was at 1 p.m. when we entered and what it was just then. So 1 second, guys. I'm going to pull up that. Okay, let me pull up MSFT option chain. This is the weeklies for this week. View quote details, 1 minute at 3:10 or 1 p.m. At 1 p.m., these contracts were 2.8. 2.8. So when we wicked down to T1, those were 3.25. 280 to 325. That is a 16%. 16 freaking percent. Holy cow. Can I go over those figures another time? Yeah, what figures? All I'm looking at is the actual option that was here. So this was our for 121. All right, we hit T1. hit T1 at 16%. This was 3.25, which was 16%. Okay, we're hitting our T2 right there. .8. It was actually a little bit lower than 2.8. It was like 2.79. Now that contract is up at 3.4. That was a 22% return on that. So that was 3.4. 3.40, and that was a 22% return. All right, guys. That played out pretty freaking well. At any point, we could have taken profit. 16% there, 22% there. Not bad. Let me get a screenshot here. Yeah, okay, so the cost of the put, where would break even be at? 308. Yeah, I'm not looking at that break even. That's if you were to exercise a contract where you'd break even at. That we're just trading the premium here based on the chart. Alrighty. Alrighty. Love to see that, guys. If you took this trade, congratulations. Just made free money. Come in here, learn a little bit, see you play based on what we're learning. Love to see that, guys. Love to see it. All right, I just want to pull up my RSI here and see what was going on here. So we'll pull this moving average off the RSI, and what we end up seeing here is an overall decline on RSI. It's just pairing it there with the RSI. So we've got a candle over a previous high of day. So now might be a good time to enter calls to take it to our T1 level. But I'm not looking to take anything right now. I'm just letting the chart play out. Letting it play out. Okay, if we were to enter a put or not a put, a call here, we could be stopping out if we're breaking below this wick here, 309.60. I'm not by any means saying that let's go get calls now, but just looking at the chart here, we want to see a break or actually a holdover previous high of day. We've got a candle and wick on it right now, so we don't have confirmation to enter our calls here, but that would be the next thing that I look at. Breaking below 200 EMA on SPY puts back down to this level, 456.40. Okay. Looks like Apple is going to be the one to take us down to that level if we're breaking below this previous wick here. Okay, 168.62. Boom, look at that. Look at that. Okay, I'm actually going to update this. Boom. I'm going to update all this. This looks even more enticing. Boom, 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 baby. Look at that. Bag. Bag. About 20 minutes left today, guys. If you have any questions, just drop them in the live chat, live education chat here on Discord. Or if you're watching on YouTube, drop them over there. Beautiful. Just came down, broke our 200 EMA, and wicked down to our target there. 456.40 was our target. Look at that. SPY puts also did well here. On a day that we were green, guys, on a day that we were green, we came in and we played puts because we are technical traders and we don't care, all right? We look at the technicals and we trade the chart. That is a skill that hopefully all of you will be able to develop here in time using discipline and everything that we talked about here today. Any questions, guys, don't hesitate to bring them up. All right, looking back here at SPY, still coming down again to retest this this spike up here from SPY. So this was entry. We could enter puts up here, or we could enter puts down here as we break our 200 EMA. At 200 EMA break. That played out beautifully as well. Doesn't get any better than this, guys. It really doesn't. SPY 0% break even on the day currently. If it breaks and confirms a 456.50-ish level would somewhere, could you enter put again? Sorry, I'm back. Haha, this is too good to pass up. So breaking this level, we do have levels for another put entry, puts below 456.50 to take it down to 455.67, as well as a session low down here at 454.87. Okay, just making sure I'm understanding. Yes, you are. You are understanding. Well done, Doc. You're tracking. You're tracking beautifully. Okay, now that we are continuing downwards below our previous high of day, what are we looking? Okay, we're dealing with some area of support from this initial pop-up here on Microsoft. Our next target down, low conviction, would be 306.73. We do have a knife, this falling knife down here. How we're getting all these red candles, or we're getting green candle pop, green candle, green candle, green candles, green candles. We're knifing all the way down to 306.73. So we very well could cycle all the way down here. This would circle back to Robo's question here. This would not be a weekly contract, seeing as how we're looking for, a much bigger push. We would push this out a bit, maybe just 1 week, so that we're not getting killed on theta as we come back down to this level. Keeping a tight stop loss here. Now we have our previous high of day. We have our T2. So our T1 would be our stop loss, or T2 if you entered right now would be our stop loss. What strike would I be in a put now? Well, the 310 is still very viable, but if we're pushing out a week, we might look at the 305s, because that's the next strike below, right? If we were going to be taking puts. Very low conviction that we recycle 306.73 here. I'm just anticipating Microsoft to hold 2% plus on the day and hold this 200 EMA. Because if we were to break down at 306.73 here on the 3-minute, that'd be breaking our 200 EMA. Very low conviction that we break our 200 EMA on a day like today with Microsoft. So low conviction, low conviction, low conviction, us coming down here. That's just the next price point that we would be looking at if we do flush. SPY has hit our target like 3 times now. It's beautiful. Beautiful, beautiful, beautiful. Now what I would be doing here on Apple is I'd be moving my stop loss. So stop loss in green now. So if we're breaking back over 168.80, that's where I'd be just taking profit here on Apple puts. If we had entered at any point here on Apple, it'd be great if we got it on this pullback here at 13.18. Or if we took this big red candle downwards, we entered right about here at 168.80. So stop loss would have been if we were breaking over 200 EMA. Now we've pushed it down to the green. Okay, trying to pick back up here on this candle of Microsoft. We did have good volume on the previous candle. What we need to see is another candle pushing over previous volume to confirm volume being our leading to retesting previous high of day. If we're getting a volume bar below this, then we are anticipating a 200 EMA. Okay, let me throw on my VWAP here just to see where we're at. So we're under VWAP. That puts our, if we had entered puts down here, previous high, below previous high of day, we could utilize our VWAP, breaking over VWAP as our stop loss, or T2 or T1. So we have a few points there. So we're below VWAP. This is my favorite run to play, VWAP to 200 EMA cycle. Would I consider picking up a call on Microsoft? I would if we saw price action picking back up, which we need volume to do so. I would consider a call, though, under that circumstance. Good questions there, Robo. 40 seconds left in this volume bar. Just based on how this volume bar has been building, it looks like we're going to have another decrease in volume here. 30 seconds left. So VWAP to 200 EMA push looks valid here for more puts, but we are pushing that expiration date out. Kind of hedge volatility. What increase in volume would be the key indication on reversal? Us breaking over this previous volume bar, and then beyond that, pushing over our volume moving average. Good question there, Robo. So this is just really basic scalping, guys. I don't like to complicate it more than this. Anything more than this is kind of unnecessary. Our 9 EMA could be on here. Our 20 EMA could be on here. We could have Bollinger Bands on here. But this right here was just beautiful. Just using what we had. Okay, our T2 at the time was about our VWAP. So we could have utilized our T2 either being previous high of day, that price action point, or we could have been using our VWAP. About 10 minutes left in today's class, guys. Thank you so much for joining up and showing out. Okay, great questions in the class. Good interactivity. Yeah, there we go. Thank you, Doctor and Robo, for keeping the chat going, and John as well. Appreciate all the questions here today, guys. Before we even got to this Microsoft stuff, I actually showed you why I took a call and how I scalped that call for 20% in 2 minutes. So from our entry at 1 p.m. to our T2, that was 27 minutes to make 22%. Pretty good. If you're in a 310 put, would you still be in a trade at this point or stopped out? If we were in a 310 put, we would have already taken profit. So that T1 and T2 are points that we were looking to take profit. This is a premium at that T1 and at that T2. That's where we are taking profit. If we had a sizable position, we could be, having our T3 either be this point down here or our 200 EMA. In that case, yeah, we would still be partially in the trade, but had scaled out majority on T1 and T2. But yeah, I'd be all out of this trade at this point. We're looking for the meat of the trades. We're not necessarily looking for the top and the bottom. Like it's great to grab a put right here at the top, yes, but realistically, when we get our flush, we build this candle below right here at 1312. This was I'm sorry, 1303 was our confirmation. 1303 was our confirmation. So this would have been a more realistic entry. That's why I have it encapsulated within this put entry here, this circle. This would have been a more realistic put entry, seeing as how we're rejecting our higher low. But still making over 10, 15% on T1 and T2 there. So would I have scaled into this put trade? No, because we're scalping. This would have been a one in, one out. So that's how I like to scalp. I've shown scalping with scaling, but not on weeklies. Okay, that's not something I recommend. When you're scaling in a quote-unquote scalp, it's not really a scalp at that point, and it's more of a day trade. So I don't scalp, or I don't scale into scalps. I scale into day trades. Does that answer your question there, Robo? The way that we broke this T2, you could have moved your stop loss all the way to T2 and just kind of let it ride, looking to take profit at either 200 EMA or 306.73. But if we break over our T2 again, you're just, stopping out there in the green for like 20%. So not clear on the scaling process. Maybe one more time on the explanation. Yeah. So I don't like to scale into scalps. When I'm scalping, I like to enter once and exit once. Okay, whether that's at my T1 or T2, usually it's going to be at my T1. Seeing as how our VWAP was at T2, that would have been a great point as well. So these are different options to get out of a scalp. Depending if you just took one contract, though, then, maybe you just rip it all at T1 or you rip it all at VWAP. But for when I'm scaling into trades, it's more of a day trade, and I'm not trading the weeklies typically, unless it's like Monday, Tuesday. Then if we're Wednesday, Thursday, I'm not day trading weeklies. I'll scalp weeklies. Day trading, I'm looking to hold longer duration, and I have the option to scale. Does that make more sense there, Robo? But no, I would not have scaled into this trade. If that's still confusing, I can give it another go. SPY trying to hold on to 456.50. Hit our target over there as well. Still getting pretty close to our target level here on Apple puts. Just saying that you could have taken puts at any point under the 200 EMA. Just like you could have taken calls at any point over the 200 EMA when we were getting close and been fine. Aloha. Aloha says, you'll keep listening. Yeah. Yeah, so day trades, I scale. Scalps, I don't scale. Day trades, I'm looking for bigger pushes. Scalps, I'm looking for smaller pushes. The definition of scalp trading is looking for small percentage moves within the underlying. Like 0.5%, 0.25%, 1/10. Whereas for a day trade, I'm looking for like a whole percent or maybe 2%. or cycling a big pre-market high to pre-market low level. Those are when I'm day trading. But when I'm scalping, like here, scalping puts at the top was great. However, calls on the day made sense. Anything specifically that makes you want to day trade versus scalp? If too complicated, tell me to kick rock. Well, hopefully that explanation helped there, doctor. Um, in the beginning of the day. Okay, good. Okay. Either way, I'm not going like super out of the money or anything like that. So, for SPY, I like to trade like $2 to $3 out of the money. For day trading, day trading and scalping, I like $2 to $3 out of the money. For scalping, I will push I'll push 1 and 0 DTEs for looking for movement to hit my targets within an hour. If we're not if we're not hitting the targets, but we're still, all of our technical analysis lined up for that scalp, and we're still holding, I'll roll that position into a further out expiration, and I will just let it be what it's going to be. Still hit those targets, but get a less percentage return, just hedging myself against the risk by rolling the expiration date out. Ready to enter a call in Microsoft? Nope, not yet. You see how we just rejected VWAP there? What we need to enter a call on Microsoft is to get a candle over VWAP. Of course, doctor. What are you a doctor of? I'm curious. What do you do? A life. I did a long story tell you in a DM. Well, just to give you a little personal insight, I'm 25 years old. I've been trading since I was 15. My mom was an analyst for CNBC, and took me under her wing. Then I joined the Navy at 17. 2 days later, after joining, I turned 18 and started trading myself. She taught me fundamental analysis, and in time, I grew into technical analysis as I got to the point of doing this full time. Yeah, thanks for your support there, doctor. In the military, I was in the Navy. I was stationed on the West Coast over in San Diego. I worked on the flight deck at one point, then transitioned into medical services, doing a lot of trauma-related stuff, and actually was in a pre-med program, a STEM program with SDSU during my time in. As time went on, deployments, I was still in class and things of that nature. I decided I wanted to be a pilot and switched over to aeronautics. Studied aeronautics as I got out of the military and into starting the trading collective and doing this more full time. And when my dream was to be an oncologist and work at like St. Jude's or something like that, like be a kid cancer doctor. That was kind of my dream at one point. I just really, really, really fell in love with the trauma aspect, and then from a service standpoint, wanted to go be a pilot. So I worked with Marines while I was out in San Diego and NSW as well, being in training scenarios and stuff like that. Just really, really loved what I did over in the medical field. But yeah, a little bit of synergy there. All right, guys, that's all the time we have for today. Thank you so much for. Oh, if there's a question by Robo, if and when candles are above the VWAP, what strike? The 310. 310. Just out of the money. Good delta. So 310 back, looking to take it to about 311 when we're getting our signals. But that's it for today's class, guys. I'll see you again on Wednesday. I would expect a morning class again, 9 a.m. To about 11 a.m. Here in the Discord. Thank you guys so much. I do this all day. I really love being able to do this and being able to have the opportunity. Thank you, Hawk Holdings and Traderverse, for having me. And I'll see you guys again on Wednesday. Until then, take care, guys. Stay frosty.